Hello traders, welcome back to the Forex Geek channel. If you've ever wondered why price keeps bouncing off certain levels or breaking through others, then you need to understand support and resistance. Okay, it is very important to understand this concept, the concept of support and resistance. Okay, these levels are the foundation of technical analysis, and today in this particular video I'm breaking down a powerful support and resistance trading strategy that every trader should know. Okay, now let's just quickly get started. Before we dive in, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss future trading strategies. Now, support and resistance are key price levels where the market tends to react. Okay, let us just break them down. Let's break them down. A support is a price level where the market finds buying interest, preventing it from falling further. Okay, so think of it like a floor holding up the price. On the other hand, resistance is a price level where the market encounters selling pressure, stopping it from going higher. This acts like a ceiling that keeps the price from rising. Okay, now these levels form because of supply and demand dynamics. So when price approaches a support level, you should be looking for buying opportunities, and when price nears a resistance, traders consider selling. Okay, now not all support and resistance levels are created equal. Okay, here's how to identify strong zones. The first thing for you to do is to look for previous reaction points. All right, the more times price respects a level, the stronger it is. All right, you can see in this particular resistance that I highlighted, you can see that we had multiple rejections. Can you see rejection here, here? This whole place we had rejections. Price was being defended from going further upward. Here again we have rejection. So the more times price gets rejected at a particular level, the stronger that level is. Okay, then also check higher time frames. Support and resistance levels on higher time frames, especially the daily chart or the 4-hour chart, they hold more weight than those on the smaller time frame. So in as much as you might not always execute your trades on higher time frames, but just examine support and resistance levels on those higher time frames before you then go to your smaller time frames to execute your trades. All right, also make use of round numbers. We have psychological levels. All right, psychological levels such as 1.2, 1.5, 1.7, and so on. They often act as strong support or resistance. All right, round numbers: 1.2000, 1.5000, 2.0000, 2.100. Okay, all those round numbers, they often act as strong support or resistance. Finally, confirm with volume. Okay, higher trading volume near these support or resistance levels, they add credibility. All right, they add credibility. Now, there are two main types of support and resistance that traders use. The first is horizontal support and resistance. These are fixed levels where the price has reacted multiple times. Okay, you can see these are horizontal support and resistance levels on the chart. They are fixed levels where price has reacted multiple times. Okay, they are easy to spot and they are widely used. Secondly, we have dynamic support and resistance. All right, the dynamic support and resistance are moving levels that change with price action. They are moving levels that change with price action. Examples include moving averages. Trend lines, Bollinger Bands. These are some of the indicators that you can use to spot dynamic support and resistance zones. You can draw your trend lines manually, or you can use moving averages, which are going to automatically plot the dynamic levels for you, or you can also make use of your Bollinger Bands. All right, both types of support and resistance, that is the horizontal and the dynamic, both can be used together for even stronger trade setups. All right, now let us get into the actual trading strategy. Here's how you can use support and resistance for better trade execution. The first is to identify key support and resistance levels. All right, you mark the zones where price has reacted multiple times. Then after you have done that, wait for confirmation. Okay, do not enter blindly. Look for rejection candles like pin bars, pin bars or engulfing patterns or dojis. Okay, look for such patterns around your support and resistance zones. Then always use stop loss placement. All right, place your stops below support when buying and above resistance when selling. Okay, and then you also need to combine with other indicators. You can use moving averages, RSI, Bollinger Bands, Fibonacci retracements, or any other indicator of your choice to confirm. Okay, for the purpose of confluence. All right, they can add confluence. Okay, and to enhance your signals. Then finally, manage your risk properly. Never risk more than a small percentage of your trading capital per trade. I usually recommend a maximum of 2%. Maximum of 2% per trade. All right, maximum of 2% of your account balance. Now, following this structure ensures you trade with a plan rather than guessing. Many traders make mistakes when using support and resistance. So here are some mistakes to avoid. All right, the first is trading weak levels. Just because price touches a level once does not mean it is strong. You have to look for multiple touches. I mentioned that multiple touches strengthens a support or resistance level. When you notice a level where price has gotten rejected multiple times, it adds strength to that level. Okay, so be looking for multiple touches. Also, do not make the mistake of ignoring fake breakouts. Sometimes price briefly breaks a level. All right, sometimes price, for example, we can see what happened here. You can see that we have a resistance around here, but at this point it was as if price briefly broke it and then continued downwards. So do not ignore things like this, what we call fake breakouts, because sometimes price briefly breaks a level before reversing. So always wait for confirmation before entering your trades, and do not force trades. Okay, not every price level is tradable. Be patient and wait for the right setup. All right, do not ignore market conditions as well. Support and resistance work best in ranging markets. In strong trends, price may break through these levels easily. So that is the reason why some traders, prefer trading support and resistance levels during ranging markets. All right. So that wraps up our breakdown of the support and resistance trading strategy. These levels are incredibly powerful when used correctly, and now you have the knowledge to apply them in your own trading. If you found this video helpful, hit that like button and subscribe for more Forex trading strategies. Also, let me know in the comments, how do you use support and resistance in your trading? All right. Thank you for watching, and I hope to see you in the next video.